Welcome to Cover Chronicle, your go-to for all things insurance. Today, we're exploring how life insurance can double as an investment tool and diving into the pros and cons of cash value policies. When you think life insurance, you probably picture it as a safety net for your loved ones if something happens to you. But certain types of life insurance can actually be used as an investment. Cash value life insurance policies offer both lifetime coverage and a way to build cash reserves over time. So what is cash value life insurance? Simply put, it's a feature in permanent policies like whole life, universal life, and variable life insurance. Unlike term insurance, which only covers you for a set period, cash value insurance builds equity. A portion of your premium goes into a cash account, growing with interest, dividends, or market returns, depending on your policy. But is it worth it? Let's go over the advantages first. First, tax-deferred growth. Cash value policies let your investment grow tax-free as long as it stays in the policy. Second, you get lifetime coverage and a guaranteed death benefit. Third, flexibility. Many policies let you borrow against the cash value without a credit check, which can be handy for emergencies. And lastly, some policies even pay dividends, adding value over time. Sounds promising, right? But there are also some downsides. First, the cost. Cash value policies are pricier than term policies. Second, the growth can be slow at first, since fees and insurance costs take up a large portion of your premium. Third, there's market risk. If you have a variable policy, the cash value may fluctuate with the market. Then there's the issue of surrender charges. If you withdraw cash value early, you might face fees that reduce the amount you get. And finally, opportunity cost. The high premiums might yield higher returns if invested elsewhere, like in the stock market. So, is cash value life insurance right for you? It depends on your goals. Cash value policies are great for steady tax-deferred growth, especially if you've maxed out other retirement accounts. But if you're just after basic coverage, term insurance paired with traditional investments could be a better choice. Want more details? Check out our full article on coverchronicle.com. We dive deeper into cash value growth strategies and offer tips on picking the right policy based on your goals. The link is in the description, so don't forget to check it out. Thanks for watching. If you found this helpful, don't forget to like, subscribe, and hit the bell so you never miss an update. Remember, insurance can be more than just coverage. It can be a strategic financial tool. See you next time on Cover Chronicle.